Hey everyone, Brian from Bearable Traders here, Wednesday, July 31st. Just going to do a midweek update review. And you can see here, this is the big day we were waiting for when the Fed was going to make their announcement on their interest rate cuts. And you can see here, we got the announcement where we got the quarter point cut. We just got a little bit of a market reaction there, a little bit of disappointment. Maybe there were a few people that thought we were going to get a half point. And then we kind of held steady here until Chairman Powell started talking, and of course he opened his mouth and the market started to really sell off. And basically the gist of it was this was a mid-cycle correct adjustment or something like that. Anyway, he was suggesting that there are no other imminent cuts coming, which the market did not like to hear. So the market again sold off, had a bit of a hissy fit. No more interest rate cuts. So market sold off, came back, bounced back up, and then we just had a bit of more of a sell-off into the end of the day here. But pretty much all the markets, all the indexes did that. Although it was somewhat constructive, and we'll take a look at the indexes in a minute here. It wasn't entirely constructive, but let's take a look at the groups. Pretty much everything got hit, even your safety trades, utilities on the week. Everything got hit. Technology got hit the most since it is the risk on trade, obviously. So let's take a look at the different indexes. The 10-year yield, you can see it sold off on the prospect that there isn't going to be any further cuts, or at least nothing definitive coming or off in the distance. We'll skip over the weekly charts since this is midweek. You can see here Dow sold off. All the indexes are going to look like this. Very least it came off its low of the day. You can see it did that on volume. Skip over the weekly. Small caps looked like they were just starting to make a move here, and they got right back up to this prior level of resistance here, and of course tried to make a move today and then failed. So came back. So we'll see how TNA and TZA behave tomorrow. See if we get a bit of a holding level around 155, 156. If we can hold around that level, maybe we will start to inch higher after we get past this this sort of reaction to the Fed minutes, Fed discussion. And again, this is why I don't like to hold things through events like earnings calls and big known events for stocks or markets. Like this was a big event in the market's mind, I guess. And this is why I just pared my swing trades down to almost nothing. I did have one swing trade on, small position that didn't work out. Had to stop out on that today. We'll talk about that in a minute. The Qs again sold off, came right back down, and sort of finished on this prior level of support. Prior level of resistance, prior level of resistance. So we kind of held here today. We'll see what happens tomorrow. Skip over the weekly. And again, pretty much same story on the SPY. We came back down, tested, dropped below this level of support, but then came back and finished above it. So even though the market had a bit of a sell-off today, it did end on I would say, on a somewhat positive note, holding some prior level of support. We'll see if that holds tomorrow. That will be the key. And let's see here how we did with the dollar. Of course, took right off. Not a big move on this index. It's only 20 cents, but obviously the dollar continued to strengthen on the fact that maybe there wasn't going to be any more interest rate cuts, and the U.S. seems to be one of the few countries that still have positive interest rates. A lot of them have negative interest rates now, and of course, it's where some money is flowing. VIX popped up today, not surprising. Again, held this 12 level, and that probably is a good level to trade off of. But we'll see what happens tomorrow if we get a continuation of a sell-off or a hold here, in which case the VIX should pull back. Let's take a look at some actives. Gold actually was up. It's kind of interesting on a contract basis, but I can tell you, well, Dish was the one that I took long yesterday, 35.06. and opened lower, looked like it was going to hold, and then it just started to sell off. I sold it at 34.50, which was my stop out price, and it continued lower with the sell off. I have a feeling now probably it may have put in a bottom at this 33.25 level, which is the 200-day moving average, also an area back here where it kind of held. So still, it's maybe a buy, looking at getting back into that. So this is Dustin and Nugget. Nugget, I had some yesterday. I told everyone I was not going to hold that into this announcement, just because I know this Dustin Nugget tends to go crazy when the Fed release something. And you can see here the gold miners really sold off hard here. Dust was up quite a bit. Nugget was up quite a bit. Nugget was down quite a bit. And again, basically glad I bailed on that one and did not hold it through that announcement. So, and again, that's why I don't like holding these things through the announcements. So that's about it. I'm just going to see how the market shakes, rattles, and rolls tomorrow. I'm not going to put anything on until we get some kind of indication whether we're going to hold at this level. Markets are going to come back. I suspect they'll sell off in the morning, and then we'll be looking for a bounce. It's just what I'm thinking right now. Yeah, right now we're just going to sit tight, and sometimes no trade is better than taking a risky trade or a marginal trade. So this is my book on Amazon, How to Swing Trade. If you want to check it out, it's there on Amazon, How to Swing Trade. We'll see everyone in the morning in the Bear Bull Trading Room, August 1st. July's in the books. Can't believe July is already done. So yeah, that's about it. We'll see everyone in the trading room tomorrow if you're going to join us. We're live on YouTube in the pre-market show, and then after that in the trading room. So ciao for now, everyone. Have a good evening.